By the end of this video, you'll see that the past holds the key to building your future wealth, so please don't skip this video. Video opens with engaging fast-paced clips of historical newspaper headlines about market crashes and booms, ending on a shot of a modern stock chart climbing upwards. Hey everyone, and welcome back to the channel. If you've ever felt like the stock market is this big, scary, unpredictable monster, you are not alone. It seems complicated, right? But what if I told you that the secret to taming this monster, to understanding its moves, isn't buried in complex financial textbooks, but in stories from the past? That's right. Today, we're going on a journey through time to uncover the biggest investing lessons history has ever taught us. Stick around, because this isn't your boring history class. This is your first step towards becoming a smarter, more confident investor. So, where do we start? Let's rewind to the Roaring '20s. The stock market was the party everyone wanted to be at. People were borrowing money hand over fist, buying stocks on pure hype and speculation. Your taxi driver, your neighbor, everyone was a stock market genius. This was the era of irrational exuberance. The lesson: beware of the hype train. When it feels like you can't lose, that's often the riskiest time to invest. It's a classic case of FOMO, the fear of missing out, driving decisions instead of solid research. This brings us to our first golden rule, taught by the legendary investor Warren Buffett. Be fearful when others are greedy, and greedy when others are fearful. And boy, did they learn about fear. October 1929, the Great Crash. The party came to a screeching halt. Fortunes were wiped out overnight. It was devastating, and it triggered the Great Depression. The big takeaway here isn't just that markets can crash, but what happens after the crash. Many people panicked and sold everything at rock-bottom prices, locking in their losses forever. But guess what? The market eventually recovered. It took time, a lot of time, but those who held on, or even dared to buy when everyone else was selling, saw their investments not only return, but grow to unimaginable new highs. This teaches us our second crucial lesson. The market's long-term trend is up. Volatility is the price you pay for the incredible returns the stock market can offer over decades. Don't panic sell. Time in the market is more important than timing the market. Let's jump forward a bit. The year is 2000. The dot-com bubble, the internet, was new, exciting, and it was going to change the world. Investors poured money into any company with a com in its name, often without any real profits or even a solid business plan. Companies with no revenue were worth billions on paper. It was the 1920s all over again, but this time with a techie twist. We saw companies like Pets.com go from a Super Bowl ad to liquidation in less than a year. The bubble burst, and the Nasdaq index lost nearly 80% of its value. What's the lesson here? Don't invest in what you don't understand. Hype is not a business model. A cool idea is great. but it needs to be backed by real fundamentals, profits, a strong balance sheet, and a path to sustainable growth. Always do your homework. Understand the business you're buying a piece of. But it's not all doom and gloom. History is also filled with incredible success stories born from these very principles. Think about someone who started buying shares of a solid, boring company like Coca-Cola or Procter & Gamble decades ago. They didn't chase hype, they just consistently invested in profitable companies that people use every day. Through crashes and booms, they held on, reinvested their dividends, and let the magic of compounding do its work. Their small, consistent investments grew into a fortune. This brings us to one of the most powerful forces in finance: compound interest. It's about earning returns not just on your initial investment, but on the accumulated returns as well. It's a slow and steady snowball effect that creates massive wealth over time. The key is to start early and be consistent. You don't need to be a genius to get rich from investing. You just need patience and discipline. So let's tie all these historical lessons together for you, the beginner investor in today's world. What's the game plan? First, ignore the short-term noise and hype. Don't get caught up in the daily drama of the market. Second, understand what you're investing in. Stick to quality companies, or even better for beginners, invest in low-cost index funds. An S&P 500 index fund, for example, lets you own a small piece of the 500 largest companies in the US. It's instant diversification. Third, be prepared for downturns. They are a normal, healthy part of the market cycle. Instead of fearing them, see them as opportunities to buy great investments at a discount. Think of it as your favorite store having a sale. And finally, play the long game. Automate your investments. Set aside a certain amount every month and invest it, no matter what the market is doing. This strategy is called dollar cost averaging, and it ensures you buy more shares when prices are low and fewer when they are high. History doesn't repeat itself exactly, but it often rhymes. The names of the companies and the technologies may change, but human emotions, greed, and fear remained constant. By understanding the patterns of the past, you can avoid the common pitfalls that trap so many new investors. You can build a strategy based on time-tested principles, not on fleeting trends or scary headlines. Investing isn't about getting rich quick, it's about getting rich surely. It's about building a secure financial future for yourself, one patient, informed decision at a time. The lessons are all there, written in the pages of history. All you have to do is listen. Thank you so much for watching. I hope this trip through financial history has made you feel more confident about starting your own investing journey. If you found this helpful, please give this video a thumbs up and hit that subscribe button. Don't forget to ring the bell so you won't miss our next video. What's the most valuable investing lesson you've ever learned? Let me know in the comments below. See you next time.